I have to say, I am thoroughly impressed with Tesla stock because we kind of had a liquidity event today. And some of you guys may, know this. Some of you guys may have not. Palantir, SMCI, Trump Media, a lot of other high-flying stocks in recent weeks really started to get destroyed in the last 30 minutes, hour or so of the trading day today. Tesla did a little bit. Yes, Tesla had a couple rough candles. It came back from the low of the day, and Tesla's chart here looks a lot different than some of the other charts I'm going to show you in a moment. And I am thoroughly impressed with Tesla. I'm very bullish on Tesla. I think the news today and recent news has really just been overlooked in Tesla. There's a lot of fear right now, and I don't think it is justified. And we'll talk about Tesla a lot in this video, but also this liquidity, almost like a crisis that happened towards the end of the day. And it has a lot of investors shook. So we'll talk about that here in this video, among other things, like what to expect in the markets coming tomorrow, and some headlines that could explain the liquidity mini crisis we had towards the end of the day today. So hit that like button and subscribe to the channel if you have not done so already. If you like to make money, if you want to stay up to date on what's going on with markets and with Tesla stock. Now, this liquidity crisis, you're really not going to see this if you look at the headline SPY. You kind of ripped today. I mean, it was a pretty good day for the S&P. You did come down from the high of the day. And here you can see these 2-3 candles that had a direct correlation to Tesla. Literally the same couple of candles sent Tesla stock lower. But this liquidity crisis I'm really referencing, you could see like Carvana had earnings, but they sold off into the end of the day. The big one that has everyone talking is Palantir. I mean, look at Palantir. There was no news that caused this. And I know some people are talking about the news that Alex Karp could be selling, over $1 billion worth of Palantir here over the next coming weeks and months. But that news was known in the morning. That news was known, as the stock was up on the day. Palantir ended up closing down 10%. This was a market-wide phenomena. You could see Nebius, one of the AI names that I think is really overlooked and I think has a lot of potential. It reminds me a lot of, Hims before Hims went crazy, just kind of under the radar, just flying low. Well, same thing. Seen this dramatic sell-off towards the end of the day. Another big one today was SMCI. SMCI was up like 15% at the high of the day today and really had a great day until the last hour or so of trading. The chart almost exactly follows Palantir, suggesting that this is really a bit of a liquidity crisis in certain areas of our markets, which makes me wonder what could be coming next. You can also see a pretty much identical chart to Palantir in SMCI. SMCI was up like 20% today and, ended up coming down sharply in the last hour or so of trading. Again, not really on company-specific headlines like Palantir, just really started to sell off out of nowhere. And the part I'm really impressed with when it comes to Tesla is you didn't see that. After those first initial couple candles, which yes, were quite large to the downside, Tesla did recover into the end of the day, which was much different than Palantir, which really didn't recover at all, or SMCI that recovered, in a very choppy way. SMCI was still up 8% on the day, but you can just see the sell-off was extreme from $66 down to $55. I mean, that's like a 20% round trip move here. Now, there was a couple of things that happened today. You did have the FOMC minutes that came out at 2 p.m. with one thing in particular that is noteworthy. First thing I will point to from the FOMC minutes is, quote, Fed officials think that strong January CPI implies lower or better prints the rest of the year, rather than implying that Q4 inflation was too low. So basically, the Fed thinks we will continue to see progress on inflation this year. And this was really the big one. This caused the bond market to actually react today. Several participants suggest halting or slowing balance sheet reduction pending debt ceiling resolutions. As Fiju here on X says, a reminder that every FOMC member has to unanimously approve these minutes. This is intentional. So really people are suggesting that QT could come to an end this spring. That means that interest rates will likely come down. Not the Fed cutting rates, but 10-year Treasury yields. Now, QE, quantitative easing, is when the Fed goes out and buys bonds. It's a way for the Fed to control long-duration bonds. QT, quantitative tightening, essentially just means the Fed is like your sink would trickle water, right? The Fed is trickling water out of their balance sheet, meaning bonds, okay? So they're continuously allowing a supply of bonds to enter the marketplace. So bonds can be tricky for a lot of newer investors to kind of understand. There's an inverse relationship. So when people are buying bonds, yields come down. When people are selling bonds or not buying enough bonds, yields, well, go down, okay? So if the Fed is allowing these treasuries and from their $7 trillion balance sheet to be let out into the marketplace, quantitative tightening, what they're actually doing is forcing bond yields up, okay? Because they are introducing more supply. So if the Fed stops that, turns that sink off, if you will, there's not going to be that extra supply of treasuries hitting the markets and less pressure on treasury yields actually rising. I think this had something to do with the liquidity crisis today. I'm calling it a liquidity crisis, because in certain stocks it definitely was. And this, I can't prove this, but it makes sense to me. Some of the high-flying stocks, the stocks that have done the best recently, I believe got this sharp move lower in, the last hours of the trading day today, the last hour really. Palantir, SMCI, some of the stocks that have done the best. Because if rates do go lower, you're likely going to see a broader participation. You're not just going to have the Palantirs that are the ones that are doing really well. And I know we've seen a little bit of a broadening recently, but rates coming down will likely benefit more areas, more stocks. So, with this rate dynamic, it's really been stock by stock. Like Palantir has done very well, Dollar General has not. Other names have not, and SMCI has done well recently. You've really seen the stocks that have done the best sell off the most in the last hour or so of trading. I believe that's because investors are kind of positioning for a broader market rally. And companies where interest rates will actually, benefit if rates go lower. Like Palantir is probably not going to benefit from rates going lower, from an end to quantitative tightening. Same's true with SMCI and some of the other liquidity names that sold off. And I think that's why Tesla actually did well into the end of the trading day, among obvious other reasons we will discuss here in this video. So this is my theory to why you did see a bit of this liquidity crisis. I think it had to do with the FOMC minutes and interest rates potentially coming down in the next couple of months with an end to quantitative tightening, which broadens the horizons of where investors should be investing their money. Okay. Interest rate sensitive companies, not just, high valuation companies, which, Palantir, right? SMCI, not as high value, but they have their own issues. It just really broadens the horizon. That's just what I noticed. Let me know your thoughts down below in the comment section. That's the bullish side of this. That this was just a big aggressive rotation, as these stocks were doing really well, as we got new information. The more doom and gloom outlook to this would be, well, the high flyers usually go down first before the rest of the markets. I don't believe that is this, situation that we're being presented with. I don't think it's the start of a, larger crash or anything like that. But I am open to opinions. I acknowledge my theory may not be correct. That's what makes sense to me. Let me know if that makes sense to you down below in the comment section. And here you can see even in after hours, SMCI is falling 2.5%. Palantir is down another 1.5%. And it looks like this is kind of continuing your high flying names getting sold off. It's interesting though, the Russell, really took it on the chin as well, which with the theory that I have does not make a whole lot of sense, although we could just be gearing up for, economic data that we're going to have over the next couple of days. And I mean, let's face it, the Russell really ran up here right before the liquidity issues started. What looked like liquidity issues or just a mass rotation. So call it for what you will. You're basically back to the same levels you were at like 2 p.m. today for the Russell. So really not a big deal. But again, SMCI, Palantir, these were some massive moves. Now, Atlanta's Fed Bostic said as well at 3:27 p.m., which the time of this coincides with the sell-off that you've seen in a lot of those names. He says that January CPI may be a bump or a new trend, reduces confidence in 2025 outlook, warns policy changes could impact inflation and productivity, notes business leaders optimistic on regulatory changes but expect to pass tariff costs to consumers, says Fed did not cut too much last year, policy remains restrictive, supports balance sheet reduction, but monitoring to avoid over drawdown amid debt ceiling uncertainty. Like, this to me sounds good and bad. It really feeds into the whole end of quantitative tightening in the second half of this. But it's, some concerns about inflation. Like, this seems neutral to me. It does come off kind of aggressive compared to other Fed speakers that we hear. But not a huge cause for concern. It sounds like the Fed's really hedging their bets in both directions for inflation to go higher again or for, things to continue on the path that we've seen. And look at that. SMCI is now down over 4% in after hours. Palantir continuing to fall. The trend is continuing. At the same time, Tesla is actually rising in after hours, which apples to apples looks very good. Now, option activity for Tesla stock today was very positive yet again. Not a big shocker these days. Tesla has, almost every day had some very bullish inflows in the options market from big money. You had 414 different trades totaling $576 million with a positive order value of 84% versus about $400 million yesterday and a positive order value of 84%. So the situation looks pretty damn good for Tesla. You also had about 1.4 million shares that got covered as well today. So it looks like in the next short interest report, you're going to see short interest fall again, and you're already at the lowest short interest percent of free float you have seen in Tesla's business history. Couple that with the outperformance you really seen today compared to other stocks, and you're looking pretty damn good for Tesla. Meta was down 2%. Amazon was red today. Nvidia was red today. Other big tech names. Apple did see a bit of a recovery, was red for most of the day today. So Tesla was a true outperformer. Now, heading into tomorrow, you are going to get some data that will move our markets. You will get initial jobless claims, expecting 215,000. Philadelphia Fed Manufacturing Index, expecting that to really plummet down to 20 from 44.3 last month. But it's the subcomponents that are most important. Philly Fed Business Conditions, CapEx Index, employment, new orders, and prices paid. If prices paid goes higher again, you're going to have more fears about inflation, and that's an issue. As long as that comes down, that's what you want to see. Now, Fed Goolsbee will speak at 9:35 in the morning, considering what Fed Bostic said today, kind of, sounding really bullish on one hand, end to quantitative tightening, kind of bearish on inflation on the other hand. It is something that I think we want to pay attention to. You will get the CB leading index month over month as well tomorrow morning, expecting 0%. Now, I do want to say the last thing I think most Fed officials want to do right now is to piss Trump off and to start a larger drama between the Fed and the president. Okay, so keep that in the back of your mind. It doesn't mean the Feds would not raise rates or something, but I do think the bar is a lot higher for the Fed to raise rates than a lot of investors think. I think the last thing the Fed wants to do is go out and raise rates when or even get too hawkish when they were cutting rates before the election. That would just look very political, and I don't think the Fed wants to put themselves in that position. I actually think the Fed would allow inflation to run a little hot for a couple months instead of paint themselves into that kind of portrait. So, I think the hawkishness that Bostic tries to do, like, it's cute and all, they're trying to sway expectations, but it logically doesn't make any sense to anyone that's been following the Fed over the past couple of years. Or what the Fed, wants to continue to do, and that is be independent. Like, you don't want to look political here. You don't want to piss Trump off here unless there is a huge issue that you absolutely need to respond to, a huge spike in inflation or something. The Fed is not in a position right now to be super hawkish. That's my opinion. And plus, I don't think they really have to. Inflation's not an issue. Fed Kugler will speak at 5 p.m. tomorrow. And as well at 6:30 p.m., you will get the inflation rate year over year out of Japan. And then Friday morning, you will get manufacturing PMIs, services PMIs, and the composite PMIs that will be coming out, and that will be important. Again, services is like 80% of the economy, close to it. If services are good or bad, that's really what the markets are going to focus on. You will also get final expectations for inflation from the Michigan Consumer Sentiment Survey. It was really skewed by Democrats last month, expecting really hyperinflation, like 5.5% inflation from tariffs. We haven't seen that, and it doesn't look like, we are going to get inflation from tariffs anytime soon. So this number could come down on Friday, which would be a positive for markets. And in case you missed it, today the big news really was that Tesla is considering starting retail operations in India by April of this year, plans to launch an EV under $25,000, and the company could import it from Berlin for sales in India. This was also news yesterday. Markets didn't really pay too much attention to it. And I do think this is bigger news than most people believe, because the EV market in India is only $8.03 billion right now, but it's expected to grow to over $120 billion by 2032. That is like 60% compound annual growth rates. I mean, even if that's way off, you still could be looking at like 20-30% compound annual growth rates. Tesla to get in that market is important, especially for analysts and the investment community that still believes Tesla's a car company. Like, that's a game changer for the car business. We know that Tesla is an AI company, it's a robotics company, but from an institutional perspective, this would definitely be great news and incrementally help to kind of boost Tesla numbers as they enter the country. So that's kind of what I have for you here in this video. Again, great news to see what happened with Tesla today, but definitely some weird things happening under the surface. A little bit of a liquidity issue, what I believe could be the start of a broader rotation, played out today. Some of those comments from Fed Bostic could have been a little alarming as well for some of the stocks that have ran a lot recently. SMCI, Palantir, and there was many others that also sold off. Those are just two of the big, well-known high flyers that had everyone kind of freaking out in the last hours of trading. So let me know what you guys think about this down below in the comment section. Again, Tesla did not do the same kind of freak out liquidity issue. And I also think that is a very positive sign. And if we're thinking about stocks that are down a lot that could benefit from to the end of quantitative tightening, it would definitely be Tesla top on that list. So let me know what you guys think about this down below in the comment section. Thank you to all of you that support the channel. Thank you to all of you guys that are in the trading community that send super chats on these videos, that are members on this channel. You guys go above and beyond and really support the mission that we are trying to do here, and that is to really share information to help everyone become more knowledgeable investors. Hopefully you walk away from knowledge from these videos that can not only help you today, but help you years down the line to actually build on your knowledge, and of course in the process hopefully make a bunch of money. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.